Yes. So, students, see, we have covered the authorities aspects, how the authorities work, and what is the function of each of the authorities in the hierarchy. What is their roles, what is their responsibility, and what is the mechanism in which they work. So all these aspects we have completed. Now we are going up into the process of appeals. How the appeals are filed. If, for example, if the SSC is not satisfied with the orders given by the authorities, so if the orders that are being issued by the authority, if the SSC is not satisfied with the orders, do he has any way out further? So for that we have appeals. You can go for appeals against the orders that has been issued by the authorities. So that right always remains in the hands of the SSC. So if the SSC is not satisfied with the orders given by the uh, authorities, he can go for the appeals against those orders. Okay. So let me take, I will share my screen and then we go ahead. I believe my screen is visible. Okay. So this is your unit 2, wherein we will be going for the appeals and revisions. Okay. So see, so the first, what is appeal? Appeal is a legal right given to the SSC to challenge an order passed by tax authorities. Okay. So that is what I was saying. If the SSC is not satisfied with the orders passed by the authorities, he can go for the appeals. Now there is something called appeal to commissioner. You can file an appeal to the commissioner. So this is see, the appeal cannot every appeal has a deadline. Okay, so the appeal has to be made within the stipulated deadline, the prescribed deadline. Okay, so the appeal, uh, see, if the order has been issued today, so the appeal can be filed within 30 days. Okay, within 30 days to the commissioner. Okay, uh, within 30 days you can file the appeal to the commissioner, and in form 35, for whatever reason, for confirming your tax liability, or for reducing your tax liability, or for enhancing your tax liability, or for canceling your assessments. So for any of the purposes whatsoever, the appeal can be done to the commissioner within the 30 days prescribed time frame, and this appeal has to be done in the form 35. Okay, this is the first appeal that you can go for. Okay, then we have appeal to ITAT. See, this appeal you can do for, suppose, if you are not satisfied with the order of the commissioner. So if you are not satisfied with the order of the commissioner, uh, you can go for challenging that order, but it should be done within 60 days. Okay, within 60 days, the given prescribed time, you can go for the appeals. Okay, then if somebody is not satisfied with the appeals or the orders that has been issued by the commissioner or ITAT, you can also go for the appeals in high court. Okay, uh, but if there is any substantial question on the law, that means if there is a question arising on the law itself, then in that case you can file an appeal and you can challenge that you can challenge that rule or you can challenge that law, but this has to be done within 120 days. Okay. So if there is any substantial question that arises on the law itself, then that can be challenged in the high court. Okay, you can file, you can take the matter to the high court and you can challenge that appeal in the high court within 120 days. Okay, so that is one thing. Uh, then we have a body of Supreme Court, which is the supreme body for the justice. So if some, that is the final level of appeal. So the prospect of appeal doesn't exist hereafter. Okay. So if somebody is not satisfied with the orders issued by the High Court, then they can challenge that order issued by the High Court in the Supreme Court. Okay. So, so this is your, this is what the mechanism, this is how the mechanism works. Okay. So if somebody is not satisfied with the orders issued by the High Court, they can go for challenging the orders of the High Court in the Supreme Court. Okay. Then we have revision by commissioner. See, if the order comes in the favor, if the order comes in the favor of the SSC, the orders will be revised again by the commissioner. Okay. So for suppose if the Supreme Court passes an order in the favor of SSC. So if the Supreme Court passes an order in the favor of SSC, then the commissioner of the income tax, he will go for the revision of the orders. He will revise the orders, and the orders will be made or issued again in the favor of the SSC. Section 264 and 263 deals with this. Okay, revision of orders by the commissioner. See, basically who go for appeals, if I talk in a general sense, basically what kind of SSC will go for appeals or challenge? A SSC who is basically not satisfied with the orders issued by the authorities, such people only goes for the challenge. So even if, for suppose if you have challenged a order issued by the authority in the high court, uh, and if the decision of the high court doesn't comes in your favor and you are not satisfied with the orders of the high court, then in that case you can move ahead further and you can order the, you can challenge that order of the high court in the Supreme Court. Okay, but see, you can challenge a order issued by the authority in the high court only if there is a substantial question that stands or arises on the law. Okay, if there is any substantial question arises on the law, then in that case we can take up that matter to the high court and we can challenge that order on the high in the high court. Okay, otherwise generally, and there is a stipulated time limit, deadline is given within 120 days you can challenge. Okay. So once the Supreme Court or the High Court issues a order in the favor of SSC, the commissioner will revise the orders. Okay, the commissioner will have the responsibility of revising the order. So already I told you the section 264 and 263, they deal with the revision by commissioner. Okay. Now next is, see, TDS. Now I believe this most of you are familiar. Still, let's understand what is TDS. TDS is tax deducted at source. It means the moment when the money is given, when the money is paid, the tax is already deducted at the place where the payment is being done. Okay. So the tax is deducted at the source place itself. At the source place itself means at the moment of making the payment itself, the tax is deducted by the employer. For suppose if I am receiving a salary, so if my if my yearly income exceeds a certain limit, I will have to file my tax returns and I will have to pay tax to the government. But what if the tax is deducted the moment when my salaries are credited? So if my employer is deducting the tax at the moment when he is paying me salaries, this is called TDS, tax deducted at source. It means the tax is deducted, the tax is being reduced, the tax is being taken at the moment when the payment is being made. Okay, right at the place of the payment. So this is called tax deducted at source. Okay, why it is done? Why TDS mechanism do exist? See, TDS mechanism is one thing, a mechanism that has been designed, or the mechanism which exists so that to reduce the tax evasion. Okay, this is also responsible for reducing tax evasion and for ensuring appropriate or regular tax collection. Okay, so that is the main primary purpose of having this TDS mechanism. Okay, so when the tax is being deducted at the moment of the at the moment when the payment is being done, there will be no scope for tax evasion in the hands of the employee. Okay, for suppose if you are making some payment to me, and the moment when you are making the payment to me, at the same moment the tax has been deducted, so there will be no scope for me further that remains to evade the tax. Okay, I will have no scope to evade the tax. uh, okay, so basically TDS also leads to uh, no evasion. Okay, the SSC cannot avoid tax tax evasion, and this also ensures a regular tax collection. Okay, then we have advance tax. Now, what is advance tax? See, advance tax is making the payment of the tax liability in advance. Okay, generally paid if the tax liability is uh, more than 10,000 rupees. Okay, so so if the tax liability is above 10,000, you can go for advance payment of tax. Basically, this advance tax is paid in installments. Okay, we don't pay this advance tax in lump sum. This is basically paid in installments. We have the dates prescribed for the advance payment of taxes, like you have June, September, December, then March. So these are the months where advance taxes are filed and advance taxes are paid. Okay. So advance tax mechanism do also prevails. Uh, so we have the given months. So in these given months, the advance payment of taxes are done. Okay. You can acknowledge that there is three months gaps in between. So June, September. Now we have something called refund of tax. What is refund of tax? Refund of tax means, uh, see, if you have overpaid, okay, if you have paid in excess, okay, if the tax paid is in excess, then the SSC has the right to reclaim the excess tax that he has paid. This is called refund of tax. Okay, so if the SSC has paid tax in excess, then the SSC has the right to claim refund of the tax. Okay, he can demand back the excess tax that he has paid. Okay, and he has to. This will be done after processing the return that is being filed. Okay, uh, so this is called refund of tax. Okay, for suppose if my tax liability was 10,000 rupees and I have paid a tax of 14,000 rupees. Okay, if I have a tax liability of 10,000 rupees and I have paid a tax of 14,000 rupees, so 4,000 excess I have paid. Okay, so as an SSC, I will have the right to reclaim the additional tax or excess tax that I have paid. This is called your refund of taxes. Then recovery of tax. See, what is recovery of tax? Yes. So what is recovery of tax and why do recoveries are done? See, whenever there is when the tax authorities they discover that there is a tax evasion, in that situation, the tax authority will make sure that they do all necessary require all necessary things to recover the taxes from the SSC who is trying to evade his tax liability. Okay, so if there is anything discovered of tax evasion, then in that situation the tax authorities will make sure that they do all possible essential thing to recover the tax from the tax evader. Okay, so what basically is done for recovery of taxes? So for the recovery of tax, generally notice will be given to the SSC. If the SSC doesn't respond to the notices, then the tax authority they also go for attachment of their property, auctioning of their property. Now all these things are done basically for a recovery of the tax amount. Okay, the primary motive behind all these things is to recover the tax. Okay, and basically the recovery is done from the people who are tax evaders. Okay, who are tax evaders or people who avoid paying their taxes. Okay, so tax authorities will make sure that the tax is recovered from such people using the uh, given mechanism of the law. Okay, so for that the tax authorities they will attach their property. Sometimes they go for auctioning of their properties so that they can recover the tax liability of the SS. Now we have lapses and consequences. Now before we go for this, let's understand what is called lapses. See, for example, lapses means, for example, the last date of payment of income tax was 31st March, and I didn't file my tax. I didn't pay my tax. So this is called lapses. Okay, this is called lapses. Or for suppose if I didn't pay my tax liability, so there is a lapse. Okay, so lapses basically means when you fail to when you fail to imply by the uh, imply by the code of conduct of the taxes, that that becomes your lapse. Okay, so for the simple example to make you understand what is called lapses, just assume that today was the last date for the payment of the income tax, and if I failed in filing my returns, so it is a lapse. Okay, it is a lapse. From tomorrow you can call it as there is a lapse in payment of, or there is a lapse in filing of my return. Now when there is a lapse, there are penalties. Okay, considering it as a civil offense, so penalties are there, even prosecutions are there. Okay, uh, both monetary penalties, prosecutions are also there. um, So sometimes the tax authorities, they impose penalties. So penalties are basically imposed for non-compliance by the uh, non-compliance or failure to file the return on the given deadline. Okay, so uh, the tax authorities, they have the provision of penalty, and they do impose penalties for non-compliance with the filing of returns, or for uh, concealment. Concealment means you did not disclose your uh, true and fair tax liability. You tried hiding your fair tax liability. So that is called concealment. Okay, so if SS, this is a criminal, this is an offense. Okay, if you failed in complying, if you failed in the compliance for filing of returns, or for if you have indulged yourself in the concealment, so whether you failed in filing of return, or whether you indulged yourself in concealment of your true tax liability, it is an offense. So because it is an offense, there is a provision of penalty. Okay, and even prosecution provision do exist. Now, what are what are general things that are being considered as offenses? Okay, what comes under offenses? See, if there is a serious case of tax evasion, that means if it is being discovered that knowingly, with motive, with intention, the SSC did not disclose his tax liability and did not file his return, so there is a motive of avoiding tax. Okay, so if there is a clear intention of avoiding tax liability, that is called tax evasion. Okay, and it is a serious offense. It is considered serious by the tax authorities. Okay, and there is a provision of penalty. Then if you, what happen if somebody gives a false statement? So if somebody gives a false statement, that is also considered as a serious offense. And for this as well, we have provision of penalty and provision of prosecution. Okay. So any form of lapse becomes an offense. Okay. Whether there is a lapse by non-compliance or failure in filing of return, or uh, concealment of your income, true and fair income. So everything comes under the offense. Okay. Uh, Now, what happens if there is a prosecution? See, I'm giving you a rough idea, and then we'll go into a detailed discussion hereafter. So the entire thing, I'm giving you a rough idea. What happens if there is a prosecution? See, if there is a prosecution, then there will be a legal action in the court. Okay. The SSC will have to face the trial in the court. So if there is a prosecution, the SSC will be the SSC will have to face the trial in the court. Okay, and then the court will review the entire process, entire matter. Okay, and if the SSC is filed guilty of anything, then there will be a provision of punishment, including imprisonment or monetary penalty, that is fine. Now just give me 1 second. I will share you another. Give me 1 second. I'm sharing my another screen, and then we go into a detailed discussion. Okay, so basically, uh, with this, all your chapters finishes, and before we go for finishing everything, just let's have the detailed discussion on this everything once again. Just 1 second. Okay, so appeals and revisions. This is what we have. This is what we have discussed, and this is what a general idea I have given you of the topic. Okay, so what does basically appeal means, and who generally goes for the appeals? We use a terminology which is called aggrieved party. Okay, aggrieved party means a party which is not satisfied with the orders of the authority. They generally go for the appeals. Okay, they generally go for the appeals. So a party is called as aggrieved party if he is not happy with the orders given by the authorities, and if he is not satisfied with the orders given by the authority, then such people, the aggrieved party, they go for the appeal. Now there are different places where the appeals can be made. Okay, the first and the foremost is you can appeal to the commissioner. Commissioner is a part of the department itself. Okay, so we can appeal against the order in the department itself directly. Okay, so we can file an appeal challenging the orders issued by the authorities to themselves, but there is a deadline given for this. Okay, you cannot challenge the orders after 5 years or after 10 years. Okay, there is a stipulated timeline within which the SSC or the aggrieved party has the right to file an or challenge an orders issued by the authority. Within 30 days of the orders issued, the order can be challenged. You can file an appeal against that order within 30 days in form 35. So there is a specific form for this, for challenging or for appealing. that is form 35. Okay, so in form 35 we can challenge. Okay, and the appeal can be for the purpose of reconfirmation of our tax liability, or for reducing the tax liability, or for cancelling the assessment. But there should be sufficient, uh, what we say, sufficient documentary evidence we need to have. Okay, proper disclosures we need to have in order to go for an appeal. So the aggrieved party should have sufficient documentary evidences or sufficient documentary things to go for the appeal. If he doesn't have sufficient documentary things, then there will be no scope left, or there will be no use of going into the appeal. Further, if he is not satisfied within 60 days, he can also go for an appeal in income tax, ITAT, appellate tribunal. Okay, he can file an appeal in the tribunal. So within 60 days, he can go for an appeal into income tax appellate tribunal, uh, for modifying the orders or for cancelling the order. But in order to go into the income tax appellate tribunal, he should have sufficient documentary evidence. Otherwise, there is no use. Okay, ITAT refers to income tax appellate tribunal. Now, in the same way, for suppose if the income tax appellate tribunal, the income tax court, okay, basically the income tax court, if the orders are not in the favor of the aggrieved party, or if the order is not in the favor of the SSC, uh, then that order can further be challenged in the High Court. But there is a stipulated deadline. Within 120 days, you can go for an appeal in the High Court. Okay, only if there is a substantial question of law. Okay, so if the law itself is under question, so in that case, the file can be done, the appeal can be done in the High Court. Okay, that is within a stipulated given deadline of 120 days. Now, in the same way, if the SSC or if the aggrieved party is not satisfied with the orders of the High Court, do he has any scope left further? So the law gives him scope further to go into appeal in the Supreme Court. See, this is the last door where he can approach for or against the order. Okay. So this is the last door where the aggrieved party can go for challenging the orders issued by the High Court. Okay. Uh, this is the final level of appeal. So there is no scope after this. So whatever decision is been given by the Supreme Court, the aggrieved party will have to comply by the order. Okay, he will have no more scope left after this. Now, once the appeal comes in the favor of the SSC, the commissioner will have to revise the order. Okay, there has to be a revision of the orders which were previously issued. Revision basically means correction of the order. The order has to be corrected. So basically, for correction, we do use a word called revision. So whenever you come across the word called revision basically means correction of the orders. Okay. So once the appeal comes in the favor of the SSC, the SSC will have the commissioner will have to revise the order. He will have to correct the order. Even suo moto also, if there is any mistake committed in the order issued, the income tax department, they can go for the revision of the orders. Okay, they can revise the orders. Revise basically means correction of the orders. Okay. Then we have TDS. See, TDS basically, I told you why this mechanism of TDS has been done. So that the taxes are collected at the place of generation itself, at the place of generation of the income itself. Okay. So, uh, so, so that there is no scope left for tax evasion. Okay. If there is a mechanism of TDS, there will be no scope left, or there will be no scope remaining there will be no scope remains for tax evasion. So this is one purpose that is met through TDS. Okay, and basically TDS are mostly you will come across is being used on such places where there is a possibility of tax evasion, like especially in the trade, in the exports and imports. Okay, especially if there is a revenue uh, in the trade for exports and for export and import business, generally the TDS will be deducted because uh, here there is more scope for tax evasion. Okay, and this will give a continuous revenue for the government. Okay. Um, if I talk about advanced tax gives a scope for continuous revenue generation for the government. Okay, the government will be able to get regular revenue through advanced taxes, through filing of advanced taxes. We have months defined for we have month defined for this. March is one, and then June is one, September is one, then December is one. So where the advanced tax is being, where advanced taxes are filed and advanced taxes are paid to the government. But there is a defined limit, so it should be the income should be above 10,000 rupees. So if it is above 10,000, if the liability is above equal or above 10,000 rupees, then uh, then there can be they can file a advance tax. Okay, so basically this is a very good source of regular revenue for the government. And then we have a refund of tax. So refund of tax basically means uh, if the tax has been paid in excess by the SSC, SSC has a scope to reclaim the excess amount that he has paid. Okay, so the excess tax that has been paid by the SSC, the SSC has all right to reclaim that amount. Okay, he can file a return and he can seek for reclaim for refund of the excess amount that he has paid. Okay, and then the tax authorities they will do the processing, and then the excess tax paid will be refunded, will be given back, to the SSC. Okay, this is called refunding of tax. So for suppose if my tax liability is 20,000 rupees, and if I have paid 25,000 rupees to the government, I have a right to reclaim the excess amount that I have paid. Okay, I can reclaim that amount. So for reclaiming as well, I need to file a return, and I have to seek for the reclaiming of the excess amount. Then there is a word called recovery of tax. What is recovery of tax? Recovery of tax means if the taxes are, if there is a matter of tax evasion. So the income tax authority, they have the power to go for recovery of tax. Okay. Re Recovery of tax. So for recovery of tax, generally the tax authority, they will issue a order. Okay, they will issue a order, and not only they issue a order, first they issue a notice to the party, and generally there will be income tax raid will be there. If there is a matter of tax evasion, there will be income tax raid, and then the income tax authority, they will sometime they will attach the property in order to recover the taxes. They will attach the property if required. They will also go for prosecution in court. Okay. Now what happens in cases of lapses? Now lapses means if there is a deadline, and if a SSC or a party is not filing his returns during the given deadline. So that becomes your lapses. And if there is a lapse, there is a provision of penalty and there is also a provision of prosecution. Penalty is basically the fines, monetary fines that are being imposed by the tax authorities, and this is a civil procedure. Okay, whereas prosecution is something where the matters are taken to the court and then court gives the final verdict, the final judgment. Okay, and then the party will have to comply by the orders issued by the court. Okay, so see, if there is a failure to comply, if there is a failure to comply, uh, that becomes an offense and it becomes a serious offense if there is a matter of tax evasion. Okay, so there is a mechanism that exists for uh, both penalty and prosecution. Okay, now with this, almost every, see what is the basic, first before closing down the subject, uh, see, for prosecution, for penalty, there is only a scope of fines. Okay, monetary fine can be imposed in case of penalties. Okay, this is a civil process, the civil procedure. Then, in case of prosecution, there is a scope for both criminal action and monetary action. Okay, there is a provision of imprisonment as well as fine in case of prosecution. But prosecution takes a long time because things has to be, the verdict has to come from the court, so it may take months together. Okay, and this takes time, whereas penalties doesn't require prosecution compulsory. The penalties can be imposed even by the tax authorities if there is a non-compliance. So students, we have, from day one, we have covered almost all the aspect in the income tax. You need to go through it once with each of the topics that has been taught. See, basic concepts has to be clear. The first basic concept, the terminologies in the income tax, all the terminologies you need to go through it. What is SSC, what is previous year, what is assessment year, okay, what is PAN, then a clubbing of income, why the, what is the purpose of the clubbing of income, each of the things you need to learn. So why do we do clubbing of income? Because to remove the scope of tax evasion. Okay, to remove the scope of tax evasion, we go for, we have a mechanism of clubbing of income, so that even though there is a transfer of income, that can be taxed, that can be taxed despite of having a transfer of income. Okay, then we have a set off of carry forward of loss, set off of carry forward of losses and gains. Why there is a provision or mechanism of set off of carry forward of losses or gains? The reason is to have a fair tax, to have a fair tax mechanism for the SSC. Okay, so that the SSC is not overburdened by tax liability. Okay, so we have a set off and carry forward of losses just to reduce overburdening by taxes on the SSC. Okay, so that the SSC is not overburdened by tax. And then we have tax authorities that we have discussed yesterday. Okay, wherein I told you these authorities, they have the see, the tax authorities, they are not court. Okay, they doesn't have the they doesn't have the powers, they are not legislature. Tax authorities are not the legislature, they doesn't have the power to make laws. They are only responsible for implementation of the laws. Okay, implementation of the tax laws. So the tax authority basically works for proper implementation of the tax laws. Okay, so yesterday we have learned about the tax authorities and who are the authorities who are popular and recognized. Okay, so now today we have learned about the appeals and revisions. The revisions, appeals are nothing but challenging the orders of the authority. And a revision is mean, what does the word revision means? Revision means correction of orders. So if there is any false orders being issued, so there is a scope of correction. Okay, so if there is any false orders issued by the tax authority, there is always a scope left for revision. That that order can be revised. That means that orders can be corrected. Okay, this is called revision. So appeal is basically challenging the orders. So if the orders are, if the orders are beyond the um, if the orders are beyond, and if the orders are, if the aggrieved party or the SSE is not satisfied with the order, he can go for the appeals. So there are different hierarchy in which the appeals can be done. Okay, so you can file an appeal to the commissioner, you can go to the income tax tribunal, then you can go for the high, you can challenge the orders in the high court, you can challenge the orders in the supreme court. Okay, so in different places the orders issued by the tax authorities can be challenged. Okay, so with this we are with this we are ending up everything. Our syllabus is done. I still request all to go through the videos of my previous classes and then visit this lecture. It will connect more better with you. Okay. I hope uh, everything you will find it easy. Okay. Okay. We'll end up the class for today. We'll join back again. We'll see you again.